October 26, 2010. Wall Street time. And I tried to dress it up a tiny bit here. Okay, well, we're going to go into financial mode. I know that I've traveled a bit and I'm going to continue traveling, but let's focus, and I will endeavor to laser focus on this headline today. Goldman Sachs issuing a 50-year bond offering, 50-year debt. So this will be of interest to those people that are more financially sophisticated Wall Street types, and actually thoroughly enjoy that stuff, and I don't have the opportunity to talk to people about it very often. Not to be condescending, but people that just aren't in that world. I know there's people on YouTube that have, watched my videos, started their own channels, and they, and also a lot of other people, have been massively concerned about inflation, hyperinflation, all that. And I've talked about inflation. That's why in one of my first videos, when gold was at 600 and 500s back in then, I said buy gold. Okay. So gold is, 1360, whatever right now. But I'm not going to talk about gold. I'm going to talk about 50-year debt, bonds. Because we have some very interesting things going on here. I got to go to New York and talk to these guys, because this is just millions of dollars are made and lost every second. And on this, with what's going on here, it involves 1.5 billion. I remember when first, I can't help but reminisce on these things, and you finance guys might enjoy this stuff. But I remember I made a video, back then I was pretty casual. Me, I'm real formal right now. But, Bear Stearns $1 billion gone, and I happened to notice that Bear Stearns lost $1 billion and made a big deal of it. I think the stock was over $130 a share. Anyway, things happen to Bear Stearns. So things are going to happen with all this, and as they say, timing is everything. So I'm going to talk about this 50-year debt offering from Goldman. In my view, it's a big deal. It's a very big deal. And to people that run a lot of money, it's a big deal because things have happened very fast. Here we go. So, evidently yesterday, Goldman, and I think CFO of Gold, got some smart guys at Goldman. These aren't online MBA guys running or making decisions at Goldman. They're probably got a few Ivy League guys in there. The guys at Goldman, very bright guys. A combination of quant jocks, risk takers. I mean, when you're running that much money, it's a big deal. But let's just look at what happened, okay? Financial perspective. So Goldman, is going to offer 250 million. Billion here, a billion there. But 250 million of this 50-year debt. Evidently, that was the offering amount. And then they change it to 1.3 billion. Looks like within hours, 24 hours. Why does that happen? It's called oversubscribed. Starting watching these Chinese IPOs a little bit, but back to this long-term debt offering. I would say that's massively oversubscribed. So the Goldman guys, being kind of conservative, underestimated the demand by a minimum of 5 times. So the offering was switched from 250 million to 1.3 billion. So what does that mean? That means that there's people with minimum, I think they're kind of scratching the surface, 1.3 billion, that are dying to keep lock in a rate, quote, lock in a rate of 6.125% for 50 years. I guess they're callable bonds, but there's a lot of people out there with a lot of money, foundations, schools, tax exempt, non-tax exempt, and they're kind of tired of earning 1. They're in short-term instruments, 0, and people just invest in tips and got a negative return. So what does this mean? Well, this means that, of course, there's people on both sides of this fence and all over the place, but there's people with a lot of money that, frankly, are running billions of dollars that are jumping to lock in or to get a decent yield, 6.125%. So what are they expecting? Are they expecting inflation next month or next year? Or no, these people are not expecting inflation. I'm looking at something over here. El-Erian, the Federal Reserve's terrified of deflation. things, putting them together, and that's why it'll be fun sometime to go to New York and talk to some of these guys. But it's also fun to kind of think independently here on the mountaintop in Utah. But people running a lot of money are thinking short-term deflation. People that are getting into these, I doubt, or maybe some of them are expecting to hold these to maturity for 50 years. But I'm sure a lot of these financially sophisticated people, very financially sophisticated, are thinking, and when is this going to turn? I think the masses, the crowd, the herd is in, okay, inflation, QE2, freaking about inflation. But the quiet person sitting back, and I've been warning about this, talking about this for 2 years, and increasingly I'm seeing signs of deflation. I understand things are going up. I went to buy some buffalo meat and double in price. So in food we have massive inflation right now in some things. I mean, corn hitting new highs, stuff like that. But the financial system is still broken. And short term we have deflation, maybe even possibly going a little bit into the medium term. That is why this is oversubscribed by 500%. So what's going to happen with this Goldman offering? Here's what I think was. Here's what Man of Truth, Brent J. Long, out in Utah is thinking independently. But I'm sure there's some other people thinking like this. Timing. Okay, Goldman did this offering. Do you think these people made a bad investment? Do you think the people that put in $1.3 billion to get 6.125% on a 50-year debt offering, do you think they're stupid? Do you think they're going to get wiped out by QE2 in the next 2 or 3 months? I don't think so. I think they made a good investment. I think they're going to be able to sell these at a profit tomorrow, the next day, and a few days later. I don't think QET is going to materialize like most of the markets think. I think we're facing short-term severe deflation overall. Not having this myopic view of price of a candy bar, price of Kellogg's cereal or oatmeal or whatever. That's a food commodity. Overall, the financial system has already collapsed, and now it's figuring out what's going to happen. You've got the Federal Reserve buying its own debt. You've got the massive Chinese amounts out there. But back to this Goldman Sachs 50-year debt offering, boosted to $1.3 billion. I don't think this is the first 50-year offering you'll see. I haven't had a chance to study it. Maybe there's some already on the books of other companies that don't know. Not on my mind. Bottom line, I think the people that got into this, it was oversubscribed, will make a healthy profit. And some of these people are traders. The question is, when are they going to cash in this 50-year debt? 2 months? 6 months? That's the big deal. I've been talking about the 30-year short bond trade forever. I still wouldn't take the position. I want to position myself to be able to take a position because I do think it'll be the biggest trade in history. But right now we're facing deflation. There'll be other bond offerings. These people will look good. It's all an issue of timing. El-Erian says the Fed's terrified of deflation. Well, I think I used the metaphor Nightmare on Elm Street out when I was out in California. I think politics is kind of minor compared to these trillions of dollars flying around. So the elections, I know people are exercising. I got kind of excited about it, and it'll be kind of interesting to watch it. But the big picture of trillions and trillions of dollars in debt, that's the big thing. And there's things bigger than that, but it's a pretty big thing, you know. I guess, $188 trillion in derivatives. We've talked about stuff like that and heard about it. So we're going to face deflation. These people that are all about inflation are wrong, in my view. Of course, my views are strong. I'm not part of the herd. I'm a black sheep, and so while the white sheep are jumping off the cliff, I'm going, excuse me. Because the white sheep are jumping off like, bam, 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 bam. Deflation. So look at tenemos ahora. I don't even know how to say it in Spanish. Deflación. Deflation. 50-year bonds. Rewind. Yep, back at Harvard. What was the big deal when we were back at Harvard as the new students, future masters of the universe? What were we talking about? We were talking about the S&L crisis. I had a friend, good friend, Kevin, did a paper on the S&L crisis. That was the big deal back then. Back then, we thought people were insane. They were so stupid to lock in money at 5.25%. The S&L, savings and loans. People would put their savings in there, they'd loan out. Well, they went under. Crisis. And as I predicted, the price of gold and the price of wheat. It's not an arrogant thing. It's just seeing the future, okay? It's just seeing the future. Just seeing the future. By being read all over the place. Just the way it goes, okay? You can take a yoga class. Of course, you have to study financial history. Of course, but you have to study social history, religious history, economic history, politics, war. This all has to do with what's going on with 50-year bond rates. And so people that just are recently understanding the Federal Reserve, it's like, good, glad you figured that out. Pretty cool. But it's kind of like somebody that bench presses, and somebody just got 135. It's like, cool, yep, you can put 45s on both sides now. I know it's cool, you're excited for the person, but 145 is a low warm-up weight. So, man, oh man. Anyway, anybody that holds these bonds for 5, 10 years or longer will be absolutely devastated and have their head handed to them. But short term, I think these will be a profitable trade. Long term, it'll be just like it was back when I was at Harvard with my friends talking about the S&L crisis, Kevin did the paper. And long term, people, are you kidding? You locked in money at 6% in 2010? The prime rate is now 21% again and above. That'll happen. When will it happen? That is the question. When will it happen? So myself, I need to position myself to take care of that because it'll be massively profitable. Yes, through derivatives, options, billions and billions and billions and billions of dollars will trade hands in the next few days, months, and definitely within 12 months. Long-term interest rates. It'll be the trade of a lifetime. Right now, people that hold long-term debt, oversubscribed 500%. I'll be watching this really quickly. Of course, politics, I'm trying to get into it because I know a lot of people are interested in it, but big picture, trillions and trillions of dollars. And what happens after that is what interests me. Goldman Sachs 50-year debt offering. I suggest, and of course, you can't convey this in 5 bullet points or in a 10-minute video or in a year of learning. To really figure this stuff out, it takes years to have an informed opinion on this. So, I'll be watching all this 50-year stuff very closely. If I'm in California, if I'm in Elko, if I'm in LA, if I'm in Toronto, I'd like to get back to Europe before things really hit the fan. I love Europe. I love France. That'd be great. Go to Paris. Just be there. Check out the financial markets. Talk to my friends over there. Yeah, we got a great Harvard friend right there in Paris. And then go down to Côte d'Azur. Learn some French for sure. Anyway, I digress. Goldman 50-year bond. I will be watching it very, 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 very closely. And those of you that manage money, I know there's a few of you. I know I've gotten into a bunch of other stuff. I needed a break. But it's fascinating, isn't it? Goldman 50-year bonds. Holy shnikes. Rock on.